Good morning. It's our mid-morning update on S&P 500 makes the all-time highs of the calendar 2012, and there's been a big reversal. That means that price volatility came into play. Another thing that we're going to cover is that we took this trade of the week all the way up to the highs of 674. We bailed, we got out, we got into the 675 put options. That's this one right here that I have, 675 put. You can see that they're up $7.60, but let's be clear that this bull run in Apple finally reached such an overbought process that we kept warning people about. You let them go as high as they can go until something like this happens. And the 675 put was 875 on the low, 1430 on the close, hitting $23 up here. That's where the market is starting to see some reversal volatility within this summer rally that is obviously losing some steam. Now, I'll be happy to show this Apple chart so that you can see it once again, and why taking profits is the first major intraday. We make the all-time high here again. Now remember, we featured this as trade of the week, and we hit our target right up there. And then as it started to sell down, you can see where all the profit taking from that big bull run in Apple. This is a 3-minute chart straight down. Another one that we would like to cover is the great bull run that Google had provided. Got up to that 678 handle. It's the very first day that these stocks have actually had a pullback. Here is what the Google chart looks like. We got up to the highs. Look at here. We make these highs up here, but look at the long downtrend. Profit taking has come into the names. It's very clear right here that we can see what that selling is about. Profit taking 678. You can see the range is 1277. The range on Apple is 21.81. I will cover our price line trade. We originally shorted it during the earnings. We got right up to that 600 handle, and we had a $12.85 range. What I would like to point out in the high beta is that we're finally seeing some top-down reversals within that bull rally. And bull rallies should have top-down reversals, meaning that you go to the high and then you have to reverse. And we're finally seeing it on 8/21 of 2012. What we're going to monitor carefully is how some of these other big bellwethers, like our Amazon trade, that got up where the 245 short came into play on those put options there, and we were overbought. Now, when I go to a complete 3-minute chart on the Dow, and I'm going to show that now, is that the Dow was putting in all-time highs. You can see where we put these highs in up here, but look at the Dow hasn't had any reversal in this bull run. You can see that it's come down, it's filled everything in. This is the Dow Jones, and the Dow Jones made all-time highs. We're right now at 13,265, slightly down on the day. The S&P 500, I already showed that calendar year high. You can see where the Nasdaq Composite, we got straight up there, and we finally had some profit taking. That's what bull runs do, is that you got to have both sides of the tape working. So you make money when it gaps up, and the broader, bigger beta stocks that I've showed, the Googles, the Apples that have made their 52-week highs, series of 52-week highs in the month of August, are finally getting their first pullback. Okay? Even Chipotle Mexican Grill is holding slightly here on these lows. But one of the things that we look for, as always, is increased volatility. So when we put the highs in up here, we came right up to the 2802 on the Nasdaq 100, as we did. And this is this one. And it's been parabolically going up for days, and that finally had some profit taking. I would like to update our MMT staff that the put options that got down here to $12 and buying these at $14, they close at $26. They're only up $1. But on that opening bell, with that gap to that high resistance, calendar highs, remember, these are all-time 2012 double top or slightly above the previous calendar 2000 highs, and then they're rolling over and they're getting distribution. This was very lopsided. We talked about the put to call ratio being very lopsided, meaning that the calls are just They're so overvalued, and the put side, which is the short side of the market, so undervalued that markets have to calibrate and adjust their trends. Nothing goes parabolically straight up. We've been covering it this week and last week and over the weekend when we did the indexes. We told people as we go up and challenge these highs up there, that is the time to start ringing the cash register. Okay? One of the other stocks that we've been really working on has been the Salesforce. I got up to those highs again at 150.87. Their earnings wasn't all that bad. They're coming out, the preview on them. But once again, stocks are falling off their highs. Salesforce is doing quite well. FFIV, that's another major name that we got the 105 puts. We finally have a reversal. They've been in trading ranges. None of these bull runs have had pullbacks, but that's why we caution people, look, you got to know when to be a seller. And let me tell you another thing, everyone. Hedge fund managers, the bulk of the hedge fund management community is underperforming. There's only, out of 100%, there's 11% that are out doing the S&P. That's not a very good track record. What does it mean? It means that I've always said the reason why people hate the rally is because they're underperforming, they're not in it, they don't believe it. But remember what I said a long time ago. The bigger the problems, the worse that the economy is, that's when markets can just continue to get bid up and go higher and higher and higher and higher. Because they know, beyond a reasonable doubt, that you're not going to want to participate. That's why that big money's been left on the sidelines and these great bull runs back to calendar 2012 highs. They don't believe in it. Well, who cares? It's where the money prints. That's what counts. And understanding what that wall of resistance is and why that bull rally would have to pull back into a base set up, and we can see if we continue to climb higher. The higher the worry is, meaning that the more that people worry and the more that people don't believe in it, stocks go higher. The more that people love the market and the more that people want to buy the market and be involved in the market, that's when stocks go a lot lower because everyone wants to be in it. It's when you don't want to be in the market is when we get these big rallies in these indexes and individual leadership stocks, as we've always said. One of the things we're going to be looking in is we're going to be keying in on our energy patch. Yesterday had a pretty good run. We covered Hess, we did. And when we look at it in these commodity-related stocks, this is going to be a place where these are going to have to perform. They're going to have to perform in order to keep this bull running. Because the broader technology, software stocks, healthcare stocks, consumer staples, you want to name it all, they have ran their course. The most beaten down part of the market is right here. And same thing in the Morgan Stanley Oil Services. There's some great beaten down names here that deserve attention because the bull rally is going to need these names to perform. As we have clearly stated, all of the earnings estimates have come down to par value of where they're trading at in this slowing economic environment. So once again, I'm going to conclude that the S&P 500, we covered it. We got that was the high, 2012 high, and now we're in the correction phase, meaning that we went too far, too quick, but you let them go as far as they want to go until they decide that it's time to come down. SMF, market maker, mid-morning update, equities are selling off. The thing about it is, short-term we're overbought. There has to be profit taking in bull runs in the leadership.